The France's e-invoicing mandate is coming soon, and if your ERP isn't present, it can totally break the e-invoicing process. From file formats and schemas to the tax validation, everything changes from now to 2027. This clearly isn't just an accounting update. This is a complete shift between how your ERP communicates with the France tax ecosystem. And the truth is, the sooner you prepare, the smoother the transition will be. Because once the e-invoicing rollout happens, e-invoicing will no longer be optional. It should be built into every e-invoice that you send to the France tax authority. So in this video, let's break down how you can prepare your ERP for the France e-invoicing mandate, step by step. France's e-invoicing journey began with B2G transactions, business to government transactions. Since January 1st, 2020, e-invoicing for the B2G transactions was made mandatory, and the platform that enabled this is called as Chorus Pro. Now, France is moving from B2G to B2B invoicing, and this rollout will be happening in phases. Starting September 1st, 2026, regardless of the size of the companies, all the companies should be able to receive e-invoices. And on the same date, large and medium-sized enterprises should issue all of their e-invoices and transmit all of this data to the tax authority either through the public invoicing portal or the partner dematerialization platform, PDP. Then, from September 1st, 2027, small enterprises will join in, and this will complete the national rollout, making e-invoices mandatory for every company regardless of size. The company size is determined by three factors. One is the number of employees, the second one is the annual turnover of the company, and the third one is the total balance sheet value as of 1st January 2025. So whether a business is determined to be large, medium, or small, it totally comes down criteria do they meet. So this phase structure allows the larger organizations that handle complex e-invoicing process to go first. So while the smaller businesses have ample amount of time to test their integration before their go live. Now, let's quickly go over how you can prepare your ERP for the France e-invoicing rollout. Step 1 would be to assess your current ERP's capability. So it's very clear that before you even start thinking about integration or testing, you need to think whether your ERP is capable and will be able to handle all of this. So you can begin this assessment by asking yourself few questions. So the first question you need to ask is, does your ERP, whether it is Microsoft Dynamics, Oracle, or SAP, will be able to handle structured invoice formats like UBL, XML, or whatever, or Factur-X, and so on. If the answer comes out as no, then you have the first gap that you have to close. Next, you have to look at the manual touch points in your e-invoicing workflow. Are the approvals still done by hand? Are the validation and the tax code mappings still done outside the system? Each of these manual steps needs to be done and automated before the e-invoicing go live. And finally, check for API readiness. Your ERP should be able to connect securely, whether it's through an API or an EDI. If that connectivity isn't there, e-invoicing would be difficult. The step 2 would be to understand the PPF versus PDP connections. So once your ERP capabilities is clear, next you need to start wondering how you connect to the France e-invoicing network. So there are two options for this. One is the public invoicing portal, PPF, and the second option is Partner Dematerialization Platform, PDP. PPF is a government-free platform and it is ideal for small-sized companies because of their straightforward way when it comes to exchange of e-invoicing. PDPs, on the other hand, are certified providers. PDPs can handle the validation, data conversion, reporting, and cross-border transactions all in real time. And this is clearly perfect for large and medium-sized enterprises because it perfectly fits for the speed, flexibility, and the control that they provide. So every ERP has its own way of storing the invoice data. But France's system only accepts it in a structured format, which is of the following: Factur-X, UBL, or CII. So this means your first task is to identify all the mandatory fields that are present. For example, your company's SIREN number, VAT codes, line items, and digital signatures. Then you would have to create a mapping document, which is basically a clear reference that shows how the ERP details maps to the new schema. So you don't have to spend weeks working on it. Instead, you can just get this done in hours. Under the new system, France's tax authority will validate the e-invoices that are sent to them almost in real time. So it's clear that your ERP can't just send static files anymore. It needs to be able to send, wait, and confirm every invoice that has reached the tax authority. So this would mean that you have to implement an event-based trigger, meaning when an invoice is created, it should automatically go up for validation. This monitoring dashboard should include validated, pending, rejected. So this would give your finance and IT team the full visibility that they need, and it would help catch the errors before it results in costly penalties. So for the fifth step, it would be test early, even before the pilot phase begins. There's one thing that France's B2G rollout has taught us. It's that early testing pays off. So businesses need to start simulating far ahead of their B2B rollout date. So this would basically include setting up your ERP and sending sample invoices, and you need to test your validation logic, error connections, and API logic. And it's important that you bring your IT, finance, and the compliance teams together for this part of the process. So it's only when they work in sync that this would become successful. Now finally, I know that all of these steps, which is mapping, validation, all of them seem complex. And that's exactly why compliance was built to make this process simple. And with compliance, that means finance can focus on the business logic rather than the XML errors. IT integrates once, scales to every new country effortlessly, and the compliance team can gain full visibility and audit trails across the regions. And with our framework kits, which actually powers every country adapter within the compliance API platform. So in short, you just integrate it once, you're not only ready for France, you're ready for every other EU countries.